Rates are down, but days on market is up. So what does that mean for you if you're thinking about buying or selling in the Twin Cities? Well, my name is Joe Carmack, and this is your April 2023 market update. And I'll share with you exactly what you need to know what's going on in Minnesota real estate right now. All right, why don't we start you off with those interest rates? So this is always top of mind, seems, for buyers and sellers right now. Currently, Freddie Mac is showing that we're at 6.25 roughly on that interest rate. So this is, it's actually come up a touch since then. This is updated as of 4/13. So average is right around 6%. I mean, I usually see people come in a little bit better than this. But overall, you can see there hasn't been a lot of significant up or down movement. However, what is pretty interesting, let me zoom out a little bit on those interest rates. And here's what I think people actually need to know. We used to have pretty consistent rates. So if you look back a few years, it was very consistent, right around that 3.5% or so interest rate, right? So everybody kind of knew what to expect, and you got pre-approved, and the rate that they quoted you was going to be pretty similar to what you actually found with the property when you go to purchase. We obviously then jumped up quite a bit, as you can see. And then from here, it hasn't changed a lot overall as far as where we've been at. You know, we've kind of been around the 6 range. What has been different though is just that from day to day, things can swing pretty dramatically. Now we're still swinging in the same range. It's just a much wider range than we were used to. And so, you know, when you get pre-approved, just make sure that you understand you can't lock in that interest rate usually until you get the property under contract. So you get an offer accepted for your purchase. So because of that, payments can change pretty dramatically. I mean, I never tell people to like hurry up and rush, but it is almost one of those things where if you find some properties that are on and all of a sudden rates go down, if you jump on it, it really can save you a ton on your payments. Rates being at 6.25 is about right. I do think this is going to get better over time for a number of different reasons. That's what I've heard a few different lenders saying. But also as presidential elections come up, if you actually look at the historic interest rate changes, they every single year get better right before the presidential election. So I don't know who's putting their toe on the scale there and making things look better for their party, but it's just what happens every year. Let's look at the month supply of inventory. That's a fancy way of saying, are we in a buyer's market or are we in a seller's market? And the lower we go on this graph here, it's more of a seller's market. The lower we are, more of a buyer or balance we would be as we go up. So we did see a little bit of movement last month. As you can see here, we went up just 0.1 months, so it's not a major change. Also, this was pretty interesting. If you recall, up here was January, this was February, and so we actually went the opposite direction. These little valleys are always during the winter months, and then they peak during the summer, so that's a very normal cycle. However, we would have kind of expected in here for it to either stay flat or to start going up. With our February number, we didn't, it went down, and so then going up is very normal. However, it was only 0.1, so that was a little bit surprising. Let me clear that all out, and then we'll show you the rolling average here as well. This is what we're looking like if you average the month supply over a 12-month time period, and that saw no change at all. So not terribly surprising, but a little bit unfortunate. This is only a 3-year graph that I'm showing here. So obviously we had been seeing things careening towards being more and more of a seller's market over the last few years. We were so excited because things started bottoming out, and then they have started to trend in the right direction. Basically, everybody's rooting for it to being more of a balanced market. Buyers are never going to root for it, or excuse me, sellers are never going to root for it. Obviously, they want it to be as seller favored as possible, but when you're selling and buying at the same time, that's a really tough market to have been in like we were. So we're going in the right direction. We're not doing it terribly fast. It's not like the sky is falling and things are just collapsing or anything like that, at least locally in the Twin Cities. But with March, that number sitting flat, we've actually been flat since the first of the year. So in a way, it's a good sign that we're not just all of a sudden making some major changes overnight, but we wouldn't mind it continuing to go up in that direction, just a touch more. Let's talk about prices. So with changes in buyer and seller's market, how is prices being affected? Well, not too big of a surprise that we're not seeing any major changes so far. So since the first of the year, that rolling average has literally not changed $1 on the median number there. So 0 change there. Since 1 year ago, we're up 6.1%. So the historic average is about 4%. So that still means that we're above kind of where we'd like to be. You've heard a lot of talk about inflation. We need inflation to come down in order to see that number dropping. But with this being average, that number is going to be a little bit higher. Where we're going to end the year, it's really anybody's guess. I'm not sure that I can even speculate very well at this point. I think the main thing is to know that that is going to be a positive number, that there's no one locally that I'm hearing that's really really confident that we're going to be a negative number, that prices will be less expensive next year. I would be okay with that. I would have no gripes about it. I just don't think it's going to happen at all. So then let's look at the month-to-month change. This one was pretty interesting. You saw on the last screen, the rolling average, no change. It was 355 a year ago as well. We saw January to February sitting flat, not super uncommon because again, we kind of bottom out. Wouldn't have been surprised if we saw a little bit of increase. I'm going to attribute a lot of this, I think, to the weather. Being that we've had such a snowy weather, people just don't get out in the winter like they traditionally would. So I think that just delayed us a little bit. And then things shot up. So this was a pretty interesting number to see here, that we are up $13,000 just from February to March. That was a pretty significant increase, you know, up 3.8. And this is just since January, from March's number divided by January. So that's a great increase. I'm not surprised because we saw a little bit of delay that we'd saw a little more of a lurch in the market. What are we going to see over the next few months? Well, you know, this is primarily my gut talking, but I've got so many clients going right now. I think I've got 5 or 6 buyers that have been looking at homes, and every one of them, there's multiple offers. Every one of them, it's really, really competitive. We'll talk about some of why that is, but it just suffice to say, I think that number is actually going to go up more than we would have expected. We were kind of hoping that the valley there would have slowly curved up. I don't think that's going to happen. You know, easily $10,000, $20,000, $30,000 over their list price. And so when that happens, simply put, that number is going to keep going up. Let's talk about days on market next. And this is the rolling average for you. No surprise when we're seeing that change. So with that month supply that I had shown you before and how we're starting to curve back, this is days on market, but this is going to give you a pretty good idea of that as well. Things have been going incredibly fast, and then we are starting to see things change. So homes aren't selling quite as quickly. We like to see that. It's just exhausting for buyers and sellers and agents, everybody, when you've got to jump out there and get into the property immediately the first day. Just last week, I had a property that it was coming soon on the market, which you can't show it. It was coming available on Thursday. And then they changed their mind. They made it active on a Tuesday and they took an offer right away. That tells me they probably got an offer on that property sight unseen. Switched it to active, had a 1-day inspection, and it went straight to pending. So that's pretty crazy. We don't see that a ton, but we are seeing that. So with that happen, how's it going to affect our days on market? The rolling average is only up 1 day from last month. So that's 15 days on market is what we're looking at right now. We like the direction that this is trending. But it's not trending very quickly. Let's look at that was the rolling average. This is the month-to-month change. We did see a pretty significant drop from February to March. So again, probably because of the winter and everything, we actually saw an increase in our days on market from January to February. And then February to March, we just collapsed, to use a media buzzword. 17 days on market less than February. You do have to keep in mind that's very normal, like we had said. Things are selling much slower during the winter months, and then this is the summers down here when things are selling more quickly. It's actually pretty darn normal. If we would have seen less of this, I think it could have supported the argument of, you know, the market's shifting and things are going towards being more balanced. It is, but it's very slowly, very subtly, and this is not a particularly encouraging number to see that things sped up so rapidly for March. Part of why we're seeing that is going to be the number of new listings that are coming on the market. Now, we got to talk about this one. This is pretty interesting things going on. So let me rewind the clock. If you missed it, this is January, this is February. And we saw very, very little increase in the number of listings sitting in the market. That's not a good sign, but I think that is going to be weather related. People just don't list their houses when all of a sudden we've got another foot of snow on the ground or whatever. So that's what we had been going on. Third snowiest winter has slowed down the number of new listings, so that's normal. We did see a huge spike, which was good. I mean, we didn't want to see that few new listings coming into the market because that would be really bad for lots of different reasons. So we did see a big jump in the number of new listings hitting the market. That's great. I'm a little bit curious to see actually what happens next month because I think that'll be more reflective. You know, I don't have a lot of data to go off of how this is going to affect our year. What you should probably know to compare it to other Marches, I went back quite a few years for you. Oops, there you go. And we should be like in the 67,000 range for March. So in reality, you know, this should have probably been more like up here for March. So that would have been normal. We're not expecting normal. We are expecting things to happen a little bit less, but even though it was a great spike to see, it wasn't as significant as we would have minded to see. If our winter has kind of delayed us. Could that make everything sort of delayed a month? And then those listings that would have started up in January that waited till February, or the ones that were February pushed to March, March to April. So it could just be that we see a whole shift and seeing it later, and then we could just see all of those numbers for April, May, and June happening and happening later. I wouldn't be surprised to see that. But overall, we just don't want our whole year to be too far down from a normal year. So we typically are gonna max out around like April timeframe on average. So maybe that'll be May this year as far as the peak of the number of new listings that are hitting the market. So what you need to know if you're a buyer, first of all, you've got to come ready to play. Things are aggressive and you're most likely making an offer that's going to be above list price. And I would strongly encourage buyers, as I always do, get more cash in the bank, whatever you got to do. If you can pull a little bit out of savings, if you can get some overtime, and just simply having more cash is going to be able to make you able to give a more compelling offer to get your offer accepted more easily. And then also you can look at lenders that have a loan program. For example, one of mine that's got 1% down conventional with no PMI, but I had a buyer that switched to that from a traditional down payment type of program with, I think they were doing 5% down. Because they were able to do that, they didn't have to get help from the sellers for their closing costs. So if you can do that, that'll really help you as a buyer. As for sellers, really, it's what it's always been, but you've got to get your home priced correctly. You can't be too greedy and eager on that price. If you overprice it, the home just won't sell. If you price it correctly, it'll sell in multiples. And so there's kind of a saying that I've heard a few times that you can't price a home too low in today's market. I'm not going to underprice it a ton, but if you're in between two different prices, erring on the lower side will give buyers a better perceived value. They'll think it's a deal, and then they're going to offer you way over, and then you'll actually sell it for more. On the flip side, if you take the higher price and you're wrong, and we can't get an offer that's a solid offer at that price point, then it's going to mean you're going to have to drop the price a whole bunch. It'll look like a stale listing, and then it won't sell anywhere close to what you want it to. So when in doubt, error slightly low so that you can then sell it hopefully in multiples. So that's what you need to know for buying and selling in the Twin Cities. My name is Joe Carmack. You can find all my contact info in the description down below, and I'd love to help with your next move. You can also give me some questions in the comments, and I'm happy to answer those for you as well.